I am the Tofu Golem. Please enjoy the video.
In this video, I will explain how to find downtrend stocks. First, understand that a downtrend indicates a period where a stock's price is generally declining. Look for a pattern of lower highs and lower lows on the price chart. This visual cue is fundamental. Additionally, observe if the stock price consistently stays below key moving averages, such as the 50-day or 200-day, which further confirms the downward momentum. This initial assessment is crucial for identifying potential opportunities. Next, incorporate technical indicators to strengthen your analysis. The Relative Strength Index, or RSI, can signal if a stock is becoming oversold, potentially indicating a temporary bottom within the downtrend. Also, check the Average Directional Index, or ADX. A value below 20 suggests a weak trend, which can be common in early downtrends. Crucially, observe if selling volume increases significantly during price drops, confirming strong bearish sentiment. These indicators provide deeper insights. Beyond technicals, fundamental analysis and news are vital. Review recent company earnings reports for any negative surprises or guidance reductions, which often trigger downtrends. Investigate industry-specific news for broader headwinds affecting the sector, like new regulations or increased competition. Furthermore, pay attention to analyst downgrades or significant shifts in market sentiment towards the company. These fundamental factors often underpin and sustain a stock's downward trajectory, providing a comprehensive view of its struggles. Finally, effective risk management is paramount when dealing with downtrend stocks. Clearly define your entry and exit points before initiating any trade to manage risk effectively. For those comfortable, short selling can be a strategy to profit from declining prices, but it carries higher risk. Remember to check the description for a link to Little Trees, Black Ice, and other great deals. Always implement strict stop-loss orders to protect your capital from unexpected reversals or accelerated declines. This disciplined approach is key to navigating volatile markets successfully.
Thanks for watching. Consider subscribing if we helped you today.